Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Norah, Mulinda, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. How about this? Tesla approved an interim stock award worth about $30 billion for Chief Executive Officer Elon Musk to keep his attention on the automaker. I would think that would do it. Steve Mann joins us. He covers all the autos companies for Bloomberg Intelligence. He's down there in Princeton. Hey, Steve, I mean, I can't think of a company, maybe, I don't know, since maybe Ford Motor Company, where there's a key man risk like Tesla here and Elon Musk. What do you make of this stock award here?
Yeah, I think it's very positive news for Tesla because, they are going through a pivot right now. Not only an automaker, but they're very focused on AI. But if you look at Elon Musk, Tesla is not his only business, right? He's got XAI, his AI company, which owns the former Twitter, and he also has SpaceX, Neuralink. I think they're all related in some ways to AI, and I think without Elon Musk and Tesla, I think there's going to be a lot of risk to that vision for Tesla without him there.
Steve, you mentioned that there are a lot of different things that are vying for Musk's attention. Of course, we do know that he was really politically involved, and then we thought kind of pulled back, and then he mentioned his intention for creating the America Party. So clearly he still remains in these conversations here. But what are investors looking for right now from him? And does it seem as though his attention is devoted as much as it should be to Tesla?
Yeah, I think fortunately for now, his attention is very much devoted to Tesla. And he said that at the second quarter earnings call. I think his presence is important because right now the company's going through a changeover in terms of the direction, the strategy, right? Cars has been very important. It continues to be important to drive that AI theme. But without Musk there, I think the company will have to, won't able to find the next person really to drive the company to the next step in expanding robotaxi, expanding their Optimus robot offering in the future.
Do we care about how many cars they make and whether they make any money in the old car business, Steve?
We do. And a lot of people think that it's a full pivot towards AI. But I think making cars and developing that AI software goes hand in hand. It's almost like Apple and its ecosystem. There are opportunities for Tesla to actually license the FSD, the full self-driving software out. But I think in the meantime, it's not something he's looking to do. I think he wants to build out robotaxi internally and actually drive revenue and profits. He does see huge profits from the robotaxi and from the FSD software. If you look at other software companies, margins are high double digits on the software for any software. But then with his FSD software, the car is an integrated component to it. It's very important that he continues to make cars not only for cash, but for really marketing that software that he has.
Steve, a lot pressuring Tesla over the last few months. We're looking at a stock that's down about 23% so far this year, and it's the worst performing stock within all the Mag 7 stocks that there are right now. Explain to me right now what the latest overhangs are right now for the company.
Well, I think one big overhang that's been removed is his pay package. There is a lot of fear in terms of him potentially being kicked out of Tesla. But I think the biggest overhang right now, or where the investors are more focused on, is the expansion of robotaxi. Right? He launched it back in June in Austin. He's launching it in the San Francisco Bay Area. And he's also thinking about launching in Nevada. And it's from the looks of it, it's going quite well. I mean, there are some hiccups here and there with this complex engineering system that he's putting in place for cars. It's normal. It's normal. So, but safety is still his priority, and he's going at it at a measured pace. But it seems like he's expanding it relatively fast. The area of coverage is much bigger than it initially was back in Austin back in June, and we're seeing something similar in San Francisco. So investors are really focused on when robotaxi will start contributing to the bottom line, and we think that probably more likely in 2027.
Steve, thanks so much for joining us. Always appreciate getting a couple minutes of your time. Steve Mann, he covers all the autos for Bloomberg Intelligence. He's safely ensconced down there in Princeton, New Jersey.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, they had a little earnings from Berkshire Hathaway over the weekend. Why did they do it over the weekend when nobody else does it? Because it's Warren Buffett. He can do whatever he wants, basically. Matthew Palazola, that ruins his summer weekend. He's a senior analyst covering all the insurance guys for Bloomberg Intelligence. We'll get to the earnings, or maybe we won't, because all I want to talk about is what is Burlington Northern Santa Fe, which Berkshire Hathaway controls, what are they going to do in a world where it looks like we may have some consolidation and get cross-border rail service? What's the company saying about what they might do with BNSF?
So they're saying characteristically nothing. Okay. But what we think and what the market's thinking is, I would say this, Buffett is, I would put almost a zero probability of Buffett getting involved in a bidding war over Norfolk Southern, right?
Norfolk Southern.
Yeah.
Norfolk.
So he
pronounce it correctly. Norfolk.
So I don't think he's going to try to outbid UP on that one, right? Like that's just not what Berkshire does. But then the speculation is CSX is the other thing out there. And I'm not a railroad analyst, but we've done some work on it, only on the weekends. Our rail analyst thinks that Burlington Northern will be at a big disadvantage should this deal go through with UP, and that they would have to do something. That would leave CSX out there, which is the other East Coast railroad, and then Berkshire's got the West Coast railroad, so they could maybe merge those two. The stock of the market believes this too, because the stock of CSX is up like 25% since this initial bid. Again, like as a Buffett watcher and studier, I kind of feel like he would want to sit this one out. But if I could exactly predict what he would do, then I wouldn't be taking the Metro North into work. So
tell me about it. So if this were to happen, though, how big would it be for Berkshire?
Yeah. So the enterprise value of CSX is about $85 billion. So that would assume no takeout premium right now. Berkshire has $344 billion of cash. So they could theoretically do it in cash if they wanted to. It would take a big chunk out of their cash. Buffett's got only a few months left as CEO. He will step down at the end of the year. And he still remains as chairman, so I can't imagine that he would be, completely uninvolved. But, I would assume heir apparent Greg Abel would have a lot to say about any potential deal.
All right. I'm speaking as a former railroad analyst, which my tenure there covering the industry ended in 1989 when I went to business school. Have to do the deal. He has to do a deal with CSX.
Yeah, I mean, they have the money. I mean, they buy it in cash. I was just running some back of the envelope. It's going to be accretive to earnings versus just holding it. And if interest rates are going down, that makes it probably perhaps more attractive for them to do something. It'll be interesting. He wants that one last elephant, and that this would certainly be it.
Boy, and now to me, the whole thing is most important person in this whole discussion is Jennifer Rhee at Bloomberg Intelligence. She does the antitrust ruling, and I don't know how this stuff gets approved other than Trump says, I want it done, and then the Surface Transportation Board just follows suit.
I think they have some game theory there, right? Because, I talked to Lee, our railroad analyst, BI, and he was saying it seems like an uphill battle. He's not the antitrust like Jennifer. But, does Berkshire sit back and say, well, maybe this just doesn't even get approved, so why are we going to launch a bid for CSX that might also not get approved? I don't know. I mean, they have a lot to think about in Omaha.
I mean, who's left in the landscape, right? You've got Berkshire. I mean, we've got these other names. Who are the major players outside of that?
Are we talking about for railroads?
No.
Not exactly my expertise, but I don't think there's anyone else that would
just a bunch of short lines.
Exactly.
So, all right, let's get to the earnings. Any takeaway here? Hey, what's the cash position, and what are the earnings trends for this company?
So cash position $344 billion. It was down a couple billion from last quarter. So they took a write down on their Kraft Heinz investment. It's getting a lot of press. People are, I think, attributing the stock decline in the quarter to that. I mean, the net after-tax write-down is 0.6% of Berkshire shareholders' equity. So the stock's down 3% on that. It doesn't really make a ton of sense. They account for the Kraft Heinz investment in the equity method, which meant they were holding it for much more than the stock was worth. Because of those rules, they have to write it down eventually. So I'm not shocked. I don't necessarily think this is a vote of no confidence in the stock holding. It's kind of the accounting. The earnings were like 11 billion, that's stripping out a lot of the noise. That's pretty much exactly what we thought they were going to be. But there were some moving parts. Insurance was weaker than I thought. The railroads were better, and even retailing was better. All
right, you stay close to the phone because I want to talk to you about this railroad thing here, and we'll get Lee Klaskow on. We'll get Jennifer Rhee on because you could argue Transcontinental Railroad. Why don't we have one in this country? I mean, come on, let's be honest.
It's 2025.
Yeah, exactly. I'll come out of retirement and get this deal done if you need be. Matthew Palazola, Senior Analyst, Property and Casualty Insurance for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right. Workers at Boeing's St. Louis area defense factories are striking after union members rejected the company's modified contract offer. When I first read that, I was like, didn't we already do this?
I know.
But that is a further reading. I found out that was the commercial
different here.
Union out in Seattle or whatever. These are the defense people. So just when you think, Boeing's kind of out of the woods, cleaned up everything, and stocks up 25% year to date, and then this comes along. So I don't know how to make it. George Ferguson, this is his job, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence. George, how important, how big of an issue, how big of a headwind is this for Boeing?
Yeah, not much. So you're right. We did this before. The lion's share of the machinists, there's some 30,000 that were represented up in Washington, struck their deal last year. We calculate, this is about 6,000 machinists, again, compared to 30,000 up in Washington State. We calculate that if this 6,000 machinists get a similar deal as the machinists did in Seattle, which I don't see why not, it probably costs Boeing all in when it's all done in 4 years, when the members get 43-ish% increase, costs them an extra $200 million. For Boeing, look, everybody wants to preserve $200 million, but for Boeing, I think not that material. Plus, it's in the defense business. Some 40-ish%, 42% of that business is cost plus. So there's likely the ability to defray some of those costs through those cost plus contracts. So not that big of an issue, I think.
George, it seems like Boeing is always in the headlines nonetheless, though, whether it's internally what's going on with employees or what's happening with their planes here. Have things seemed to have gotten any better, at least internally? Is this a more, a newer strike, if that makes sense? Or have there been a lot more claims being made?
So I think you broke up a little bit on me, but I think you're asking if things are any better. But I think they are, right? I think we saw 2Q numbers for the company, and they're delivering airplanes. They're at 38 build rate, going to 42. The defense business has got some problems, right, with the fixed cost contracts. They still eked out a bit of a profit this year. They've made about $200 million operating profit so far this year. So that's about the increase in the cost here to the machinists. Now look, the things should continue to get better at that defense business. They have that big fixed price legacy programs. Though there's some very important programs inside that legacy fixed cost program business that they'll be happy they have over the years. One of them is the Stingray. It's an autonomous refueler that works off Navy aircraft carriers. I think in the future that'll be pretty important. The KC-46 is the tanker they build. That'll be very important as well. So I do think this is no sign that things aren't haven't turned around. This is just one of the last stubs of their labor that once there increases after the pandemic to cover that increased inflation. I think it's going to be a blip, I think.
George, you mentioned that there are still some things to iron out as it pertains to Boeing's defense business in particular, but how are they stacking up? How is their defense unit stacking up against a lot of the other different defense primes, like a Lockheed, for instance?
So, Lockheed just had a bunch of, at least one major charge in their last earnings and just got roiled by that. But I would say that, first, financially, they're just not performing very well compared to their peers, which I think, on the glass half full kind of side, you could say that they ought to have a lot of capacity to improve performance at that business. And they've got some, like I said, some pretty good programs. I just talked you through, that refueler, the two refuelers actually. But they won the F-47 contract where they're going to help develop the next sixth generation fighter. That's going to be some $20 billion, we think, over the next 4 years. That's going to be largely cost plus. That's a great contract. That will improve their fighter business. They build F-15s and F-18s. Those are sort of sunsetting, but they're very, very capable fighter jets. We've seen countries around the world order them and use them very effectively. So the defense business has, again, those glimmers of hope because there's a strong product portfolio there. It's just been eclipsed again by some of these fixed price contracts that they've really, sort of messed up under Muhlenberg, and now need to sort of get reordered, get some of them off of the books and get going. But it's a good business.
Hey Jeff, George, how has the global defense prime business changed just in the last 6 months with President Trump getting agreements from a lot of big European countries to up their defense budget? Presumably, if the Germans are spending more, the French are spending more, they're probably coming to the U.S. defense primes. How has the world changed, if at all?
So we think so. So, I think right now the debate is, can Europe really provide all the defense products they need to be, to create a credible deterrent? Or do they need to go outside the bloc in order to buy capability? We think they need to go outside the bloc to get capability, especially sort of the most important capability, currently. And I think that some of that most important capability is air defense, and U.S. defense companies do very, very well. They've got very advanced products that they've built through a number of generations of those products. That have shown their ability over in the Middle East. And those are going to be like RTX, Raytheon, very strong in interceptors, radars. Lockheed as well is in that business and is going to do well. And we've seen the orders come from Europe for that. I think some other things that Europe needs, they'll probably get largely at home. Things like armored vehicles, tanks. The Europeans build some very capable products there. I think they'll buy them at home. Fighter jets are a little bit different, right? Europe doesn't build a stealth fighter yet. They have 2 programs in the continent that they want to build. They'll take a decade to build. In the interim, they'll buy the Eurofighter out of Airbus, Leonardo, BAE Systems. A consortium builds that, but they're also buying Lockheed F-35s because they don't have any stealth technology in Europe right now. They need that Lockheed stealth technology, so they'll buy some of those in the interim. So I think that's exactly what you're going to see out of Europe, is a mixed buy, but I think it's going to be a big improvement for the U.S. primes, because Europe was spending nothing on defense, and now they'll spend $800 billion, right? They'll go from $300 to $800 billion over a short number of years. I think it'll give the U.S. primes a lot of opportunity, and European primes will have to ramp up pretty quickly.
I think that means we have to send George over to Europe even more frequently to go to some of
Soon
those
as possible.
boondoggle
So we can
air
see the lay of the
shows.
land there.
Exactly. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst. He covers it all, folks. And he's at Bloomberg Intelligence, one of the best on the street. We appreciate getting some of his times.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.